Hello everyone, welcome back to Just Invest Today. And today, man, we got some bad news for all Alibaba shareholders. Alibaba just hit a 52-week low. Guys, it's selling at like the lowest point in its history pretty much. And this is what you're seeing throughout the Chinese stock market. A lot of Chinese stocks have been just getting hit. We also have JD.com selling at its lowest point right now, which is insane. Another 52-week low stock. So you see what's happening in China, and it's all bad, man. So guys, we're going to talk about what's happening in the market, what I'm doing, what I'm thinking about, how I'm staying true to my decision of investing in Alibaba 3 years ago. When I look at the landscape, we see PDD just crushing it right now. Like PDD has a higher market cap than Alibaba, around 190 billion, while Alibaba's back at 181 billion. So you can see a stock like PDD just performing like crazy and everyone's getting on that bandwagon. It's at a 32 PE right now. And Alibaba is basically at like a 10 or lower PE. So you can just see the stark differences of what's happening in China and how people are perceiving these two companies. But we're going to get into the overall sentiment of China. We're going to talk about Alibaba, JD.com a little bit. Guys, let's get into this video. Before we get into this video, guys, like and subscribe to my channel. I'm always providing you guys with so much new content. Click that like button, click that subscribe button right now. Let's start off this video by just looking at the Hang Seng, guys. 1 year, 19% down. This just shows you the roadkill for China just in general. The 5 year, 37% down, man. All-time low. Not an all-time low, but it's trending there almost to a 52-week low at 16,000, guys. So this just shows you what's really happening in China, and all the stocks are just getting crushed. Can you imagine if this was happening with the S&P? Like, it would just be insane. You would just be like, damn, I'm investing heavy into this market. But guys, we're seeing the opposite for China right now at this point. And this is why I'm so bullish, because this just can't keep going on forever, especially since the Chinese market is on a recovery journey, in my opinion, and their GDP growth is around 4 to 5% this year. And we have to be realistic with China, guys. China is going to continue to grow. I don't care what anyone says. If people are saying the real estate market or the CCP, whatever, China is going to continue to grow. It might even become the biggest economy soon in the next 20 years. So I'm just bullish on China overall. Like, I don't care what anyone's saying. And if you look not just this quarter, not just 2 years, look farther ahead, you can kind of see the rosy picture of China as, guys, like half of the population is like still in poverty, guys. So once they reach the middle class and they spend more, and China's like GDP is not really a lot of like internal spending. It's a lot of exporting. And now they're getting more into actually domestically buying their own products. So once that starts to explode, China is just going to be out of here. So I'm just so bullish on the Chinese economy overall. Guys, China foreign direct investment in China goes negative for the first time ever. This is how negative the sentiment is. Like, this is unbelievable. You can all see throughout 2000, 2002, 2004, 2006, 2008, 010, 12, 14, 16, 18, 20, 22, 24. It's all been positive, but now it's negative for the first time. So what does this mean? This means that everyone is like leaving China. Like, there's no foreign investment going into the China. We understand the relationship between USA and China has gone sour. So that's what we're seeing. And when it comes to this, people are moving all their money into India, and India is seeing like the brunt force of this. They're seeing their stock market go crazy. Even like Japan and South Korea, their markets are going up because, guys, the money has to go somewhere. It's not just sitting in the bank. It's going to all these other like Asian countries. So that's what's happening. If you are keeping your eyes open, this is what's happening. But man, this is a bullish signal for me. Like, this is so bullish in my opinion. Guys, everyone's leaving the market. So that just causes price to go lower for a lot of companies, in my opinion, that are strong. You can buy companies in China right now lower than the cash they have on their balance sheet. So when I see that, I'm just scooping up these Chinese companies. And I don't care about people saying the CCP to delist. I don't believe any of it. I'm just avoiding that, and I'm really into China because that's where the market opportunity is. People are running away. They're fearful. I'm getting greedy into China. So that's how my bullish stance is with China. And if you are a short-term investor, I do not suggest this strategy because you're going to get scared because the market might not go up for the next year or the second year, third year. I don't know when the market's going to turn. But man, it's going to turn eventually. I don't care what anyone says. China's getting bigger. The economy's going to get bigger. it's gonna turn eventually. It can be 4 years from now, 5 years, 7, 10 years. I don't care because I'm not retiring right now. I'm gonna retire in like 20 years. So my money can just stay down there, stay solid in those companies. I don't need the money. If you're working and you don't need the money right away, because you're supposed to put money into your investments that you can kind of see grow out 10, 15 years from now. So why are you worrying about 1 year, 2 year, unless you're a short-term trader? So if you're a short-term trader, then don't make these plays. You have a short-term mindset. It might not recover next year or the next 2 years. So guys, just avoid China if you're a short-term investor. When I look at the valuations of these companies, it's just insane. I projected a free cash flow growth of 5% next 5 years, shares declining by 1% at a price ratio of only 10. And I think that's low. I get a fair value of $42, a future stock price of $69, a 21% compounded. And I'm just avoiding the macro news. This is not macro. I don't care about macro right now. I only care about the company specifically. So if you're looking at JD.com, this is a perfect valuation if you believe that the cash flow can grow 5%, just 5%. The last 5 years has been going 22%. They're doing a lot of free cash flow generative stuff. They said they're going to improve margins. So I can see 5% growth in the next 5 years. I don't think that's highly unbelievable. So I'm okay with owning JD.com for the next 5 to 10 years. That's my opinion. Baba, again, a 5-year free cash flow growth of 10%. I think that is doable, especially in this market as the Chinese market recovers. Shares declining by 1%, a price ratio of only 10. Guys, that's super low, man. It used to be the 5-year average is 21, but I'm saying 10. I get a fair value of $122, a future stock price of $197, at 22% CAGR if you believe in 10% growth of free cash flow. That's why I can sit back and just not listen to the macro stuff, because this is the only thing people care about is the macro, the story. The story always drives the narrative, man. It doesn't matter how good the company is. It doesn't matter anything. We had Apple last quarter grow nothing. It went down 1% year over year revenue growth. You have Alibaba's revenue growth of 9% plus last quarter. Guess what? Apple was up after hours. The company is still at all-time highs. It doesn't matter. The narrative is just that Apple's the strongest company. It doesn't matter about the growth. The growth doesn't even matter at this point. If a company is selling like a 30 PE, you expect at least 10, 15% growth year over year. Quarter after quarter, year over year. Like Apple is just not giving you that, but it doesn't matter at this point because Apple is such a great story, and that's what's driving the narrative of Apple. It's the amazing company, it won't go anywhere, Buffett owns it, blah, blah, blah. So guys, you can make up your own decision when it comes to these topics, but the macro is not playing a factor for me because I don't believe that the Chinese stock market stocks are going to get delisted. I don't believe the war is going to happen in the next 5 years. Maybe you think the war is going to happen in the next 5 years. I don't think it's going to happen. And maybe it does happen. Maybe it's a black swan event, but I don't believe that's going to happen in the next 5 years. I think USA is more likely to go to war in freaking somewhere else than China is, to be honest with you guys. So I don't think that's going to happen. I think the CCP is doing everything it can to kind of preserve and keep the economic growth from continuing. This is just my opinion on what's happening in China, and I'm still bullish because I can hold on forever, man. I'm not retiring for the next 20, 25 years. So guys, what do you think about this video? Are you scared to hold Alibaba, or are you just like keeping it? Are you just optimistic like me, or are you pessimistic? You've been selling out of Alibaba at all-time lows, guys. Tell me what you think. Leave your comments down below, like and subscribe to this video. Peace.